Hello, everybody, and welcome to Public Live. I am your host, Kinsey Grant, and we have an insanely insightful conversation ahead today. We're talking all about Bitcoin and macro policy issues ahead of the 2024 election. And yes, we will talk about that recent crypto rally. To do all of that, I'm so excited to welcome our guest today, Zach Pandl. Zach is the Managing Director of Research at Grayscale. Zach, welcome to Public. How are you?
I'm great. It's awesome to be on with you, Kinsey.
I am excited to have you here. We have a lot to cover. I think it makes the most sense here to start with probably the question at the front of a lot of people's minds who are listening to this conversation, which is Bitcoin. Bitcoin has boomed in 2024. We've seen some really crazy price action, up over 50% year to date, hit a new record surpassing $73,000 very recently. It's since then fallen a little bit below that $70,000 range, but $73,000 is just really something to behold, especially over the last couple of years, having watched Bitcoin prices. So talk to me a little bit about what is kickstarting this hype cycle to start the year. What drove Bitcoin prices up, and can that cycle be sustained?
Yeah, it really has been a terrific start to the year for digital assets for Bitcoin. And I think it's just a picture of a lot of demand for this asset class colliding with a pretty tight supply picture. On the demand side, we've seen inflows, huge inflows into the spot Bitcoin ETFs now listed in the US market. These started trading at the beginning of January. And have already taken in $12 billion of net inflows. So a lot of new investor demand, particularly in the U.S., through these vehicles. Why is there so much demand? Bitcoin is a macro asset, is a store of value, an alternative money system that competes with the U.S. dollar. And so you have demand for this asset because investors are looking ahead to Federal Reserve rate cuts, to the U.S. presidential election, and these may affect the outlook for the U.S. dollar, and they're looking for Bitcoin as a way to diversify their portfolio. So we're seeing this huge demand for the asset class. At the same time, the supply picture is relatively tight, and one reason for that is an event known as the Bitcoin halving. This happens every 4 years and is a part of how Bitcoin works, but with other money systems, the supply tends to increase over time. With Bitcoin, the total supply is fixed at 21 million coins. And the new issuance, the rate of new coins that are released by the network every day, falls by half every 4 years. And so we're approaching this Bitcoin halving event in April, which will tighten the supply circulating Bitcoin further. So it's this huge demand colliding with tight supply. That's what's giving us the increase in prices, essentially.
Yeah, it's interesting to consider the sort of technical elements that are going to impact the price of Bitcoin, to your point, the halving, and this idea of a capped supply with the sort of external circumstances that might impact the price of an asset like Bitcoin, to your point again, interest rates and the presidential election. One that I really wanted to kind of get your perspective on to hear a little bit more about is the impact of the election. This is something that obviously is going to impact markets across the board. It always does. Even if we've been here before, we've seen Trump versus Biden before. It doesn't necessarily mean that we know exactly what's going to happen, but I'm curious to hear your perspective on how the presidential election might impact prices of digital assets like Bitcoin. Do you have any idea of kind of what to expect heading into the rest of this year, heading into, summer with primaries and of course the big event in November? Talk to me a little bit about what you're expecting and what investors might, should maybe plan for or anticipate.
I think it's a great question and something that I do think crypto investors will be very focused on this year. Why do we care? Bitcoin is just computer code, open source computer code. It doesn't have elections, right? But Bitcoin is an asset that competes with the dollar as an international store of value. So things that affect the outlook for the dollar, like Federal Reserve policy or certainly like elections, can be important for Bitcoin because it competes with the dollar. As we're looking ahead to the election, we have two candidates that have been president before, and so we know something about where their stances are on the related issues. But we think it'll be more about the policies that are coming out of the election rather than the personalities per se. I think maybe three things investors should be focused on. The first is government spending and deficits. Both Trump and Biden governed during periods where the unemployment rate in the United States was relatively low, the economy was healthy, but they had policies that expanded the deficit, raised government debt. So we have two leaders who have previously had rising deficits and debt in their first terms. So we'll be less focused on which candidate becomes president and really whether there is divided or unified government. Unified government just means that the same party controls both the White House and Congress. And in that circumstance, it should be easier to pass deficit expanding legislation. So I think that's really the most important topic is deficits and debt and whether we have unified or divided government. Beyond that, though, we'll also be focused on inflation. In a survey that we did with Harris Poll, we found that inflation is the number one topic on the minds of likely voters. And so investors should focus on what the candidates are saying about the Federal Reserve, for example, and who they might appoint to replace Chair Powell when his term expires in 2026. And then lastly, we'll also be focused on the U.S. role in the world. When we think about the outlook for the dollar, many of the holders of dollars overseas are governments. And that means that it's economics that drive the dollar, but also politics. There are some nations hold dollars because of geopolitical reasons. If the U.S. has a more isolationist posture, a smaller role internationally, that could have implications for the dollar as well. So it's really these three things: fiscal policy or the deficit, the outlook for inflation, the U.S. role in the world. All of those things could affect the dollar, and therefore all of them could affect the Bitcoin as well.
Yeah, thank you for a robust and very helpful answer. I think the idea that there are kind of these three main buckets to focus on helps narrow the aperture, if you will, for what we should be tracking when there is so much happening. One thing I'd be curious to hear a little bit more about is the impact of rising national debt, increasing deficit, the fiscal policy element. What does that do to Bitcoin? So let's say we do have a unified government. They pass legislation that increases the deficit. What happens to Bitcoin prices? As you might expect, we can't predict everything, but I'm curious to hear what the expectation would be.
All else equal, there's always many moving parts, but all else equal, I would expect a unified government outcome. So both the Democrats or the Republicans holding both the White House and Congress to be a positive outcome for Bitcoin. Why is that the case? Why should a digital money system and store of value rise if we had unified government? Well, a really simplistic way to think about it is that when the government is spending more than it is taking in taxes, it's borrowing that money. And to borrow that money, it has to issue essentially more dollars in the form of treasury notes and bonds. And the U.S. borrows a lot from overseas investors. Overseas investors buy our bonds to fund our spending in excess of what we take in taxes. For a long time, that has worked out okay. The U.S. is the world's reserve currency, and we are able to sell a lot of bonds to international investors. But we may reach a tipping point at some point where the tolerance for overseas investors for more and more treasury bonds declines. That could result in dollar depreciation, and that can help the dollar's competitors like Bitcoin, like physical gold, like other currencies, maybe the euro and the yen, for example. So I think that's how investors should think about it. More spending, all else equal, is probably negative for the dollar because it creates more dollars in the form of more bonds that we have to sell to foreign investors.
Yeah, makes a ton of sense. And I'm curious to kind of ask the same question in regard to inflation. We have talked a lot about inflation over the last several years here in the United States and definitely elsewhere. I'm curious to hear a little bit more about the expectation for especially crypto prices, Bitcoin specifically, in light of inflation and where inflation is headed right now. We're coming down from some of those highs that we had seen before, but CPI inflation did grow by 3.2% on an annual basis in February, which is above the Fed's target rate of 2%, but certainly not where we have been. Tell me a little bit more about what you're tracking in terms of inflation and its impact on a digital asset like Bitcoin.
Bitcoin should be considered a hedge against dollar debasement. And what does that mean? That just means depreciation in the dollar versus other currencies or an erosion of the purchasing power of the dollar because of inflation. So we're not so much focused on just inflation, but whether the central bank, the Federal Reserve, is going to take care of maintaining low and stable inflation over time. And so this is actually the context that brings us to this week. The Federal Reserve meets this Wednesday in a very important event. They have signaled that they're going to start cutting rates. But inflation has been picking back up over the last couple of months. So investors are very focused on this meeting. They're going to look, is the Fed comfortable in signaling that rate cuts are still fairly likely despite some signs that inflation is percolating back up again? If that's the case, I think we can expect a weaker dollar and higher valuations for Bitcoin if they're still moving ahead towards rate cuts. On the other hand, with inflation picking back up, we may hear the Fed sound a little bit more cautious on the outlook for rate cuts. Maybe they need to wait to be sure that inflation is low and stable. That could be a negative over the short term for Bitcoin's valuation. So that's how investors should think about it. It's not so much inflation per se, but whether the central bank is determined to keep low inflation and maintain a strong currency. And if not, investors should look for Bitcoin. And we see all that demand for Bitcoin today because investors are not as confident as they have been in the past that the Fed will ensure we have low and stable inflation over the next 5 to 10 years. If you have that concern, maybe Bitcoin should fit in your portfolio.
All right. Very interesting. And I think it leads us to a question about sort of the bigger picture for crypto as, a tool for investing, no matter what your needs or interests or goals might be. To your earlier answer, Bitcoin as a hedge for inflation. I would love to hear your perspective on some of the other crypto assets to watch right now. Bitcoin has not necessarily been the only quote unquote big winner so far in crypto this year. We also have Ethereum up a ton this year, Solana up. So what are some of the big assets or big themes that you are tracking right now in addition to the price of Bitcoin?
Yeah, Bitcoin is just one use case of a groundbreaking technology that can be called public blockchains. And Bitcoin is just sort of the first killer app of that new technology. But there's a whole range of things happening in crypto or in public blockchains that have nothing to do with store of value and money systems that compete with the dollar. That's what Bitcoin does, but there's many other things. Let me say, I'll plug one of our tools. It can be a bewildering space for investors that are trying to understand the full spectrum of things that are happening in crypto. Please have a look at Grayscale Crypto Sectors. This is an initiative that we have pioneered and is up on our website. If you're trying to understand the full spectrum of things, Grayscale Crypto Sectors is a great tool to understand crypto beyond Bitcoin. But what are some of those things that are happening? I think you're right to highlight Ethereum. Ethereum is the second biggest asset in our market, and there's a focus on it really for two reasons. One is it just had a big technological upgrade that'll help it really move beyond what you could think of as an adolescence phase for that blockchain network into adulthood. And that happened just last week, and it's an important step forward for that network. There's also debate about whether Ethereum may also see ETF approval later this year. We have an active filing there, and we'll hope to hear back later this summer. So a lot of focus on Ethereum, the second largest network. But again, it's a very diverse place. Bitcoin is a great place for investors to start their crypto journey, but a lot of exciting things happening beyond that, and those things can have a good role in a portfolio as well.
All right. Well, Zach, that really covers a ton of ground in terms of what has happened with crypto so far this year, and especially with that focus on where we might go next. It's always interesting to have these conversations about what to expect in the lead up to an election, just knowing what a major market moving event it can be. And so I appreciate your time and your thoughtfulness in sharing your perspective on what we can expect. I certainly will be paying a little bit more attention to the idea of unified versus divided government. I think, it's not just about who wins the White House. There's a lot more to an election year than just that. So Zach Pandl, Managing Director of Research at Grayscale, thank you so much for joining Public today.
It's my pleasure. Thank you.